Welcome, guys, to the watch list for the week of February 1st. So, we just finished out a very choppy January. And if you had no idea about the charts, and if you're just looking at the sentiment of people, there's a lot of frustration. A lot of them are calling for a top, the market's doomed for a bigger pullback, something like that. All right. However, if I remove all the drawings and I had just shown you this chart without any context, it would be hard to say that we are at a major top. All I see is some sideways action for the last 4 months. That sideways action already has a very clear confirmed higher low. So the fact that we should come back lower or we need to come back lower, at least the chart is not really screaming that. Okay? People might have some context, maybe some big leaders starting to sell off a little bit, something along those lines. So they might have fears about the Iran situation or about tariffs or something else, whatever those fears are. They might have that. All right. But just based on this chart, I don't really see anything majorly bearish yet. All right. So that's where we start. We start on the monthly time frame. All I see is we have 4 months of sideways action. We finished January green. Wasn't that convincing, but we finished up 1.23%. We have 4 months of sideways consolidation after a nice V-shaped recovery. It's just correction through time. That's what it looks like. Now you might say, Ayush, but what about all kinds of news, right? The market just cannot make up its mind. It goes up and down. What is all that about? Well, a lot of these consolidations usually feel like that. The last time when we had something similar, I'll give you the easiest example to consider was right around here during COVID time. So we got that V-shaped recovery, and it was this period where you would have news about, oh, are we going to have lockdowns again? Are the vaccines rolling out? How are the vaccines going to be there? There's some election uncertainty, all kinds of shenanigans in these 4 months. And then price just took off. So this is right around the time where we're talking about lockdowns, we're talking about the US election, if this election was stolen, all those things. And yet the market just broke out right after as if nothing had happened. So when these kind of consolidations happen on the monthly charts, which go on for a few weeks to a month, that what happens is people start, obviously you have chop, you have back and forth, prices going up, followed by down, and people start to really get frustrated. And at some point, start to overstate the worries or the fears that have allowed for that chop. Obviously, if there was nothing, if there was no news that was negative, we just would not have consolidation, right? Market just could have grinded higher. You need that mix of uncertainty for that chop to happen, all right, for that consolidation to happen. Usually, once the consolidation is over, market just breaks out and then climbs the wall of worries that people are still going to be crying about once we have broken out. All right, so we have developed a wall of worries in this consolidation. When the breakout happens, it can just take off. Now, am I saying for 100% that we are going to break out, that there is no scenario that we can pull back? No, I'm not saying that. I'm just showing you the monthly chart, and I'm just showing you that based on this alone, there is no big reason for a deeper sell-off. Could we get some pullback to the 9MA, maybe some consolidation more in this range? Sure. But all those scenarios that the market is about to collapse and that the gold and silver are going to lead to a liquidity crunch and all those things, just not, at least on the chart, it doesn't show that. So that's the context just based on the monthly charts for both SPY and QQQ. It's the same scenario. You guys can see SPY actually has had the highest monthly close ever, right? We had 3 months of sideways. We actually closed above that. So SPY is even in a better situation compared to QQQ. So that was the one thing, all right? And I'm going to focus majority of this video on context because it's a lot more important. The next thing I'm going to show you is how 2026 by itself should be a pretty bullish year. So obviously SPY is above or higher than this 3 months of consolidation. It already broke out. QQQ is still in the range of November, I believe. Yeah, QQQ is still in the range. Obviously it's trying, it will play catch up, but SPY has already broken out. So that's a good sign. Context, another thing. 2026 is going to have a lot of high profile IPOs. We are going to have SpaceX, all right, which is one of the highest profile IPOs. We're going to have OpenAI, which has been rumored to be $1 trillion IPO at some point, right? We will have, I think, Anthropic. So just think about it. These IPOs alone, Wall Street is majorly invested in them. They're not going to allow a market to have a massive pullback as these IPOs are on deck. You'll have SpaceX somewhere between mid to late 2026. You will have OpenAI in late 2026, and you have Anthropic, I think somewhere around Q1, Q2. What are the odds that Wall Street is going to allow for a big pullback, or is not going to have the kind of optimism that you need to release such kind of IPOs? If anything, there's a high chance that we top out once these IPOs come. Imagine an open AI IPO comes. I think that's where probably all this AI hype tops out. I think that's what it's similar to how Bitcoin topped out in 2021, right as Bitcoin futures came into CME. All right, or Ethereum topped out in, when was it? In 2022, I believe, right as the proof of work thing came. I could be wrong about that, but I'm just giving you some examples. Usually, high profile IPOs like that and come towards the late stage of a bull market, right as the market is going into euphoria stage. If somebody's thinking that before those kind of IPOs, if the markets are just going to turn around and drop massively, you have a different thing coming. Can we have some correction? Maybe, right? In 2026, we can have a correction, maybe 5-10% at some point, but a major crash, almost impossible before those kind of IPOs. Just something to think about, right? Even in the 90s, we had some pullbacks in the 90s. I mean, I'll have to zoom into that chart quite a bit to go there. But yeah, we did have some major consolidations. We did have some pullback, but until the IPOs were out, we are not topping out. All right. So, two things so far. We have discussed how the monthly chart so far does not showcase any of the bearishness that's SPY, by the way. QQQ probably would have been crazier in the 90s. Yeah. So the monthly charts do not show any of the panic that people are feeling just by sitting in shop, or even the worst case scenarios that they're imagining, and that we have IPOs in mid to late 2026, for which the market will have to be going full steam ahead, and Wall Street, you bet it's going to make sure that they're going to be going full steam ahead. All right. So that's the insanity of 90s. And think about it. Right before the parabolic stage, look at the kind of consolidation where people who started have believing that we have topped out. I'm going to pull up the NDX chart just for fun. Look at this. We get the big pullback in 98 based on Russia debt crisis, get that V-shaped recovery. We are having those 4 months or 5 months of consolidation. People are like, okay, we have gone parabolic here. We need to sell off, and then boom. Right as we go into the big IPOs of the 1999. Now, I'm not saying this is going to happen in 2026. It can, but all I'm saying is we have reached nowhere close to the end of this bull market, and the monthly charts so far are just consolidation. And if we start to panic right now, we're going to miss out on a lot of opportunity that might come out of it going into those IPOs. All right. So I hope that context of 8-9 minutes keep you in the right headspace as we have just started this year, and we have finished January slightly green on both QQQ and SPY. Now that we have discussed context for quite a bit, let's discuss charts and levels.